What's going on, guys? It's David Piatek and Lourdes Fernando. It's Tuesday, the 17th of February, and we're doing like a lunchtime special for everyone out there. We've kind of changed up the times a little bit. I know that folks are busy in the evening and afternoon with family, or going out having a good time. Make sure you guys are budgeting. That's another theme for today. So Lourdes, thanks for being on again. How is your week?
Week is good. Yeah, just the weather's getting a little bit better. So I was kind of, caved into my house for a little while, and now I'm out and about walking and doing all the things. So I'm excited.
That's awesome. So today, guys, we're going to talk about a couple of different things, and make sure you guys are dropping questions in the comment section. Happy to answer anything you guys you have across the country. So again, we're going to really focus in on the housing, real estate aspect of it, and how it impacts veterans, because a lot has been going on. Right, we're already in February. Welcome to 2026. Lourdes, how has housing been looking so far for purchase transactions, I would say, and what's kind of happening in the market?
Yeah, so the market is super different in each area. So some areas I do see like, spring market is here, and other areas, it ain't like that. So it's very important for you to understand every market is different. But I'll talk about the Chicago market because that's where I'm at. The beginning of January, we saw, it was nuts. Like everybody was calling me. They're like, we want to buy a house, New Year's resolution, and all the things. And we went out there and started looking at properties. There was nothing there. So
Right.
it was like a ton of people were excited. Let's do this. Let's get the pre-approvals and blah, blah. Let's go. And nothing. We couldn't find anything. And then right after Super Bowl, we started to see a little bit of, which was like just recently. So right after Super Bowl, we started to see more activity, more listings coming out. So we're anticipating a very, very, very heavy spring market, and I believe it's going to happen in the next couple of days. So I am starting to see multiple offers. Got two of my clients under contract. However, we were up against other offers. So it quickly shifted from the winter market where we can get, concessions and great deals and everything, to now that we got a little bit of competition.
Yeah. Yeah, we've been seeing the same thing. We've had a lot of people come through getting pre-approved, and then all of a sudden they're like, wait a second, we're out into the market, and why are we back to being competitive? And I know we talked about this a couple months ago, but I can't stress enough that really like end of November, December, January, that's probably the least competitive in a normal market, but we're really seeing an early jump into it. And I think what's driving most of that stuff, Lourdes, right now is we've seen rates kind of go down, right?
Mhm.
And historically, they're the lowest they've been in 3 years. So as far as an affordability perspective, right, it's the most quote unquote affordable time, but that's kind of, I mean, the reality is that values have gone up, right? In most markets, you've seen some corrections, like in Florida. We've seen West Coast markets down south down in Florida. Down in Texas.
Mhm.
We've seen some pricing adjustments, but nothing crazy, right? So you combine that with limited inventory, rates are doing a little bit better. Do you foresee a pent up market where you have a lot of people like, I want to buy something, I want to buy something, limited inventory, rates are a little bit lower? There'll be enough movement because of that to start absorbing some of the inventory that is out there that may be not as favorable.
Yes,
That's
we
a
are.
loaded question.
That is a loaded question. Yes to all of
Yes.
it. Yeah, no, I do see a lot of properties. For example, we saw a property, loved it. It was on the market for 120 days, and now there's multiple offers, and they went with another offer. And I'm like, wait a minute, we can't wait. Like, so I am seeing inventory that's been sitting, the winter inventory, getting under contract now because of the crazy seasonality that we did have. And like you said, interest rates are
Right.
lower. We were expecting it to be significantly lower by this time, but it didn't happen. So I think people are coming out and saying like, all right, appreciation is still happening. Not as crazy as when we had really low interest rates,
Right.
but there's still appreciation that's happening, and people are taking advantage of that.
That's awesome. And they should. I mean, that's the thing. Like we're always talking about. It's not. where the market's at. It's where you're at in that process. Because if you understand your financial picture, that helps you make that decision. It's like the same thing. It's like I bought a place 2 years ago, or when was that? December of 23, I believe. And yeah, it was kind of crazy, but values were still up, rates were high, but it was just our point in life. We were like, you know what? We see values continue to go up in this area.
Mhm.
Do we want to wait another year or two where we may have to come in at yet even a higher price point? We know where rates are today. We can qualify and we can live comfortably. And that I know that if rates drop later, I could take advantage just like everybody else did when rates were 2.25. Like
Right.
they reap the benefits of that. And along with that, right, you got to think that like as time goes on, you have so many people that are like, I wish I would have. And you hear that. And we do a lot of these live events. It's like, I wish, I wish, I wish, I wish. And it's like, it goes back to where are you financially on that? And what's your take on that financial goal? Because I know, Lourdes and I go way back. And when Lourdes was looking for a place, it wasn't just, oh, let's just wake up, buy a house. It was, how do we plan for that? And then how do I get to a spot that makes financial sense to do that? Lourdes, talk a little bit about that.
Yeah, and I think we talk about this in every segment, but I
Yeah.
can't stress the most important part of it is making sure that your budget is in alignment with your lifestyle, with your goals.
Yep.
As you know, I was house poor, and I didn't want to put myself back into that house poor situation. So I was like, how can I comfortably like cover the mortgage, and still live the lifestyle that I was having? And it started causing all these issues, my mental health, like all the things. So it's so important, just like you said, the perfect time to buy a property is when you're financially ready to purchase a property. When you have a budget that you said, okay, this is what I want to spend for my living expenses. With the VA loan, you can go really high, like with your
Too
debt to
high.
income, too high.
Too high.
So you have to really say, like, okay, great, I'm pre-approved for $400,000. But is that really gonna, I wouldn't focus on that number. I would focus more on what you feel comfortable spending per month, and that would be huge. And if you're going into some condos, that's another thing that you also have to see, like, is there going to be additional costs? Is there going to be something called a special assessment with the condos? Are you going to be okay if this big project comes and you have to pay another $30,000 and breaking it up to $500 per month? Will that make a significant impact in your day-to-day?
Yeah. And I'll add to that is that I did a video. It's going to actually be released soon, but I'll give you a little spoiler alert on it. There's a study that came out that out of this group of folks, it was like over 1,000 people, 57% of them had an increase in their monthly mortgage payment. And one of the things that I found very interesting out of these participants is that they think that when you buy a home and it's a 30-year fixed rate, that you also have a fixed payment every month. Now, the principal and interest, that is true. That stays the same. But what changes is your taxes, insurance, and HOA dues.
Yeah.
And that could take you from being in an affordable position to being in a position of foreclosure. And it's not an extreme to say that, because we talk to people every single week that face that. And there's easy things that I just want to point out to you guys that you can do. Also, still check out the video that we're going to post because it talks about a lot of different things. So one thing is that when you escrow, with your taxes, you still, every time taxes are due, you will get a tax bill in the mail. But that tax bill is paid for by the mortgage company. If you see your tax bill go up, that means that you're going to have an adjustment to your escrows. And what you want to do is you want to get ahead of that by calling the mortgage company and letting them know, like, I saw that my taxes went up. can I cover what's called an escrow shortage so my payment doesn't like crazy skyrocket? Yes, it still
Mhm.
goes up. And yes, this still affects veterans that are 100% permanent and total disabled in a state that allows for exemptions. And a good one, Lourdes, you and I did it. It's probably one of our most popular videos together. So that was awesome. Talking about how veterans go from being in a tax exempt status to being in a tax paying status because of how high taxes went up. Lourdes, I know you
So,
shed some tears. That happened to you.
yes, don't remind me. I don't want to get back on that tangent, but yes, that definitely happened to me, and I'm getting very sad now. So let's change the subject. No, it
Right,
can
I
happen.
know, and that's the
And I,
thing. Like,
yeah,
people don't realize these changes until it hits them, and then it's too late. And this is why we do what we do on the channel, because we want to educate the veteran community. And if you know other veterans, or you're not a veteran, it's cool. We still like you, but it's information we need to share with the veteran community so we can
yeah.
get that out. The other part I'll touch on is that with your homeowner's insurance policy, basically it's annually on the anniversary of your closing is when the renewal happens. And guess what? Insurance companies still send you a bill and you need to review it. Oh, shoot. I'm like, I'm not even joking. What if people call us like, my insurance went up $1,500 a year? Mine went up like that too. And I was like, oh my gosh, like what is happening? So I called around, switched insurance companies before my payment got adjusted. So
Mhm.
again, these are like small little tips. And Lourdes, you made a very good point with special assessments, because a lot of people, I like Florida too, but we got a lot of people moving to Florida. And in some of these 55 plus communities, some of these homes are older. Okay. There's a reality to this that you may have some type of special assessment. That's why it's important to be involved with your board. Lourdes, I can't tell you how many people call too. They're like, oh, I didn't know I had a special assessment, because you don't go to the meetings.
Mhm.
Again, housing is different for everyone. Do you see? I know from condo perspective, values have been declining. Like it's kind of an odd time right now. So we see condo prices actually going down. Um, when somebody's making a choice, and kind of walk us through this, you have
Mhm.
single families, let's say condos, townhomes, single families, and then you have another category of homes, multifamilies, right? What would you give some advice for folks out there kind of thinking about what they want to do when it comes to making these I would say lifestyle decisions, because I'm out there cutting grass. I could be having a good time not cutting grass if I didn't have a house. But Lord, is take it away.
Yeah, so another loaded question, thanks. But no, I think each of those has their pros and cons. So you kind of led into it. So let's talk about cutting grass. Like there, I have a client was like, I am not shoveling, I'm not cutting grass, I'm not doing nothing. I'm gonna hire a painter just to paint and that's all I want to do. I'm not doing all this stuff. So they want a condo. They were like, I want, I want doorman service. I want all these things, and I'm okay with paying a little bit of extra money a month so that I don't have to do it. I just want to be cozy in my place, and that's what I want to do. There are some elderly individuals as well that say, like, I can't shovel no more. This house is
Right.
too much for me to maintain. I want to go into a condo. So we do see that. Now, if you have a dog or you have all these things, and condo life is like, hey, like I have to go out in these blizzards to take my fur baby out. I need space. I need a bigger space. Now I want a family. A condo may not make sense. So maybe a townhome or even a single family home. You have individuals like me who I was getting out of a situation and I need assistance helping myself with mortgage. So I bought a 4 unit, So it just really depends on where you're at, you know, um, in life, and what are your goals and what do you feel comfortable doing and not doing. When I bought the 4 unit, I'm like, oh boy, like what am I going to do? I have like 4 refrigerators and 4 washer and dryers and 4 this and 4 that. Like, if one of them breaks, can I go use, my neighbors? No, you got to go get a new one. So that's 4 pairs of like mechanicals that you have to worry about. You know,
For
so
sure.
so it just really depends on kind of you and what you're willing to take on. Are you willing to take on that additional responsibility or you want none? So that's kind of a long answer for your your question.
No, it makes sense. And let me ask you kind of a follow up to that. And this is something that I thought about a long time before, buying, is that there's to me personally, right, a fear of like, well, if I buy a condo, what if outgrow it too fast? Now I got to buy a townhome. What if I outgrow that too fast? Now I have a single family home. Well, now I got too much house. So, I mean, I know that exists for people because because, sometimes, and I want to point something out before I go into this. Renting is okay
Mhm.
because it gives you flexibility. Okay. Sometimes, like for a long period of my life, renting was a good thing, right? I popped around, I moved. And I like that. You're an active duty military. You're constantly moving. You don't know where you want to end up. Okay, renting is fine. We're not saying it's bad. Housing, typically, right, when you own a home, gives you stability when you need it most, right? So yeah, so kind of like back to the housing piece of like picking out which one's right for you. Should people plan more for like and then I just talked to somebody about this where they're like, well, he's like, I'm looking at a 1 bedroom 1 bath condo, but there are other 2 unit 2 bath condos. And instantly I just kind of blurbed like, well, for resaleability, 2 bedroom 2 bath is probably better. And I kind of just said that. And I was like, well, that's kind of true. But what's your take on like when you're looking at the housing situation?
Yeah, so pretty much I've seen now is a very different, and this is per person.
Right.
As far as for resale purposes, you're right. 2 bedrooms, definitely, like, either it's an office, some people work from home, etc. So it just really depends. There are, once again, you have to go back to like what are your must-haves. And that's when I talk to people, I'm like, is this a must-have or is this a um like a you would like for it to be there. For example, parking and unit laundry, things like that. Some people are like, this is like a must have. If it's not there, then I don't want it. But you also have to think about, if you're purchasing a property and it doesn't have these things, is this going to be sitting on the market for a very long time when you need to make the move and make your next, transition out of that property? So we do see some that there can be some deal breakers, garages for single family homes. We see that next to parks, transportation, things like that. So there are so many things, but if you're thinking that like it might not, be, bad for me, like would it be bad for somebody else? So you also have to look at the lens. Another thing that we do see a lot of people saying, oh, I don't like that it's on a busy road. Like, I don't, that's another thing. Like, you might love it. And like, I don't care if it's on a busy road, but is the people coming after you, would that be an issue for them?
Right. Yeah. It's kind of staggering that. So that's awesome. So let's switch gears a little bit. Let's answer some questions in here. And then we'll kind of go back to talking about some of the topics. So I know, Carl, thank you. Better than Iraq. I know he's commenting that a lot. He has a good question. So how about trades of equal value, property for property? Maybe someone in the city wants to move out into the country. Uh, don't what do you say? Don't want more payments. I just want to trade. So I've only seen this somewhat once. Have you seen that before, Lourdes?
The only thing I can think of when it talks about this is 1031 exchange, but that's completely different. That's
That's
investment.
different.
But I know that they were just throwing this idea out. I know nothing has passed, but taking your current interest rate and mortgage payment and going to another property, but that hasn't actually passed, or that's not official, correct?
Yeah, you can't do that with VA home loans, but yeah, they kind of tabled that for right now.
Okay.
Yeah. So to answer that question is that I've only seen it once, but it was kind of crazy because I'm like, I didn't think this would happen. They were like, oh, I just want to find someone that I want to buy their house and they want to buy my house. So a couple went into a house that was for sale. They wanted a bigger home. The couple that they were buying the house from wanted a smaller house. So they ended up buying each other's homes Like I've only seen that once, as crazy as that sounds, because I mean, that's like hitting the lottery. Okay, like for something like that to happen. But I've only seen it once, but I've never seen someone like shake hands, unless the only way I think it could work is if both homes are paid off, and then you're like, oh, we're just gonna swap title. But that's a good question. I've never seen it, done. Okay, next question here is a good one. Hello, can I buy land with a VA loan? How does this work? Again, guys, make sure you're dropping questions down in the comment section. So, with this question, it was a good one. One, you can't straight up just buy land to do nothing with a VA loan. VA loan doesn't do pure land loans, and I'm going to talk about land loans here in a second. What you can do with the VA loan is you can buy land and build a house on it at the same time. That's a VA construction loan where you're actually getting financing to do the construction of the loan. Now, with those type of loans, you can do one-time close, two-time close. You normally cannot be your own GC. You have to hire a company to be able to manage all that for you. There's some upfront costs that you have to think about, because you do have to get a architect. You have to get some of this stuff planned out ahead. You can't be like, I'm thinking about buying a land and building a house, and then like you find land and then you apply and then you're starting the process. Because I'll tell you, if you're married, someone else is going to have a lot of opinions in the building process. I'm just letting everyone know out there. If you don't know, now you know, because it's an interesting process. I went through a renovation myself. That's a personal story.
David, closets have to be this big, okay? Not this big,
Yeah,
but this big.
it's kind of crazy, but that's okay. That's why I would say building a house is better than renovating a house. Divorces happen over renovations. A lot goes into that, but okay. So that's one part, right? So you can do that. The other way is, we did a video a while ago, and Lourdes, I am a huge fan of buying land in general. Okay, and I'm gonna explain why. Like, I don't do land loans, so if you schedule calls me on land loans, I can't do them. Okay. Normally, like for me personally, I went to a farm and credit. It's like it used to be part, I think, of the banking system. Don't quote me on it. And then they separated out from there. And essentially, it's meant for rural areas, but you can use them in non-rural areas. You can get agricultural loans. That's typically 5+ acres. It's like what I did when I bought 18 acres of land. And then the down payments vary based on the program. But what you can do with landlords, which is cool, is that if you buy land, normally the payments are not that much because the land's not that expensive. You can pay that off over time. And guess what? They're not making more land. And as you pay down that balance and time goes on, eventually you'll pay it off, or you have a lot of equity in your land. And what that allows you to do is to leverage the equity in that land to do a construction loan other than a VA loan. And I'm going to explain why. VA loans are great in a lot of situations. But when people come to me and say, hey, I got land, it's worth $200,000 right now. I bought it for like $5,000. I have a ton of equity. I want to self GC. What do you recommend? I'm like, not working with me. I recommend going and working with a farm and credit that allows you to do a self GC if you got 25% equity in your property. And then you end up paying less money than you would doing the other construction route. So, like, just so you guys know out there, we always try to make recommendations that make sense, right? Like, if it's not me, that's fine. Like, I'm cool with that. Like, you guys know, we're not badgers. We just try to make things make sense. And if they don't, they don't. You might want to wait for a little while. That was a long answer to that question. But just know that it's a way that you can have a savings account as well with land. What's your take on land, Lourdes?
Buy more land. No, just like what you said. And I've learned a lot from, your land purchase. And I remember I was like, can you subdivide? Can you do this? And can, like, there's so many things and so many possibilities. Exactly what you said. I have a client right now that wants to build their house, and they bought the land cash. And I said, hey, you can buy the land the acquisition and use your VA loan for the builder. And it was like, nah, I mean, I have it. I just want to buy it and make sure that, I have it, and then I'll do the construction later. I'm not in that phase right now. So I thought that that's awesome. Like, I think that that's great that we do have that opportunity, because right now a lot of people are like, just like how you said, like, I'd rather just build it to my specifications versus like ripping through the walls and finding that I have to do X, Y, and Z, and I didn't budget for that, with the rehab loan. So I think it's a great option.
Yeah. And one thing that I'll add to it that I just thought of, which is huge. Okay. We did a video on this too, but I want to refresh people's memories, because I just helped somebody buy a house on 10 acres and they bought the adjacent lot and they combined it into one loan. So I'm going to explain that one more time, because like you may have not caught that. Because you might be like, well, what's the big deal? It is a humongous deal. So I guess to contradict what I said, but in a different way, can you straight up buy land with a VA loan? In a way you can. So if you have a parcel of land that has a house on there, and with that house, there's an adjacent lot. It must be touching, people. It must be touching. Land must be touching each other. And it's for sale. You can combine two of those lots under one deed and buy it together at the time of closing. So this client bought a 5-acre lot of land with a house, combined the contract with the 5 acres of land that was for sale. It was for sale by the same owner as well. And they were able to buy it together under the VA home loan.
That's awesome.
It was an awesome opportunity because it made the house. So it's one way. Now, listen, if you're trying to get like 1,000 acres, okay, that's not going to happen. I can tell you that off the bat. Technically, the VA doesn't have a minimum requirement for like a max for acreage, but at some point acreage will outweigh the house value. It ain't gonna work. Okay. We've seen this, people trying to buy like 230 acre farms, but technically you could buy a farm residence with a VA loan.
Mm-hmm.
I would recommend maybe you moving to a USDA product at that point. That's a good question. 66 Love, good afternoon. VA housing education for us this morning, so good afternoon to you. This is a good question. Hello, can you speak on how important it is to have a good credit profile? Oh, someone got a dog.
Hey, stop. Sorry about that.
This is why you got to be nice to Laura. She's going to be the same way to you. All right. So can you speak on how important it is to have a good credit profile beyond your score that affects home buying? Okay. So a couple things. One, credit score is a very important aspect of home buying. Good credit is the best way to access the best rates and get the lowest amount in fees, right? That's kind of across the board. It's a very positive thing. The other part with credit is understanding your own budget, right? With your own budget leads to good credit for that. And how many liabilities that you have impacts how much you can afford. Right. So sometimes having really good credit doesn't mean that you could afford more per se. It gives you the opportunity to get better financing terms. Okay. So that's one part. How much you have in liabilities is going to determine, like, based on, like, I'll give you a quick example. Let me step back. About $600 a month in car payment or monthly payments equates to about $100,000 of purchasing power. Okay. So if you have, some families, sometimes you need 2 cars, right? $1,200. You may be paying some childcare expenses, another $600. You have some small credit card bills that kind of add up to $2,000. Right there, you're looking at $340,000 of purchasing power. That's why you have to be able to determine, like, before going into the home buying process, what you can afford. Okay. But yeah, the credit score itself also, the way they look at it is if you have young credit, meaning that you just started your credit profile, typically you're not going to have as good credit as somebody that has established credit. And think of a relationship when it comes to credit, right? If you just met someone, you're not like, okay, I trust them with everything because they have a proven track record. Hopefully not, people. This isn't, you wait over time and see how they perform. Like, oh, they're consistent. Like they, not pay on time. That'd be kind of strange. But I'm just saying, like, they're consistent with their actions, right? And that's kind of the same thing here. So I'm trying to put it together for everyone out there. Maybe it didn't come out so well. It didn't come out so well. That'd be kind of odd, but that's okay. We all make mistakes here. But yeah, just being consistent with it. And normally, like, you want a 2-year waiting, like 2 years out from credit building. That's when you really see like huge credit improvement, like in your score. People will use like this quote unquote trick, is where they will add somebody on as an authorized user that has a long credit history, which then gives you that entire credit history. So it's one way that you can kind of go past that. Okay, so hopefully I explained that in a non-weird way. All right, next. Is there any update on the HR 817? So I'm looking over because I have it pulled up on my screen. So this is the signed into law, the VA Home Loan Program Reform Act. Now, this act is to help. Let me just pull this up because I know we do a lot of these. It's called the Partial Claim Program. Okay, so mid last year, this was signed into law on July 30th of 2025 by the president. Right, so it was introduced, House passed, Senate passed, president signed it, and this was a replacement program for the VASP program, right, which was a foreclosure assistance program for veterans, where the VA purchased the home loan, like the actual servicing of all that. They gave the veterans a 2.5% interest rate. They managed it essentially from there. They got away with that program, and then they replaced it with a VA Home Loan Program Reform Act, where they partially would basically purchase the amount you were behind. They would put a second lien on your house. Then you would be brought current on your first mortgage, and then they would defer the second. That was the idea. Well, that idea passed, but nothing has been done. So, Lourdes, a lot of people reach out and they're like, David, what do I do? And the challenge is, like, what is there to do? Because right now, servicers are doing loan modifications for veterans to 40-year AMs, which I'm just disgusted by it. But what other option do you have? I don't know if you could speak to that, because I know we talked to a lot of folks that are going through that.
Yeah, no, there's just a lot of people who keep asking, and with the high cost of everything, like, and then the taxes increasing and homeowners insurance increasing, the payments have gone up, and it's gotten to the point where some people can't afford it. And even if they want, like, I know I was trying to pull like a home equity line of credit out, and it was, they're like, no, pretty much like we're not giving the valuation. And I'm like, why not? So it's gotten a lot, I want to say a little bit more difficult, is just what I'm saying. And I'm hoping that this does come to pass so that, veterans can take advantage of that and not lose their assets.
Yeah. And one more thing I'll add to that. With veterans that are facing foreclosure, it's like over 40,000 of them. And this is just kind of I just want to discuss this because I discuss this with people, and sometimes they're like, I don't know what I should do. Majority of veterans that are in foreclosure have over 100,000 in equity in their home. So there has to be a time when you have to make a decision. If you know you can't catch up and they're not going to do a modification, and you keep staying in the house, the fees and interest continue to accrue at an accelerated rate. And you got to think to yourself, Do I sell and walk away with $100,000 and I could save my credit? I could save myself. Or do I just let it go and then I lose all of it? Right? That's something that Lourdes and we can't help you with. You gotta think, you gotta do that on your own to kind of figure that out, because sometimes we'll talk with folks and we'll just lay the options out. Like, if I buy if I, it's I have a family. I can make the payments now. I went through a hard time. My only option is modification or letting it go. But if we let it go, we can't move somewhere else because our credit is shot and I lose a portion of my VA home loan. So a lot of times they'll be like, I'm just going to do the modification. I'm going to stick with it for like a year or two, rebound on my credit. Once that happens, pull myself out of that with an interest rate reduction refinance loan back into a 30-year, or I'm going to make extra payments on my 40-year and then cancel it out if I can. So there's different things that you can do. Carl, follow up from his previous, my home is paid for and I want to trade for a paid off home. I'll tell you a secret. The chances of that happening are probably slim to none. But what you can do is the same but opposite. Sell your house for $300,000 and buy someone else's house for $300,000, and you've done the same thing. And that is way more realistic. You know what I'm saying, Lourdes? Like, yeah, you just sell your house and then you buy another one for cash, because I think it'll be hard to find someone else that has a paid off house and your house is paid off and now you got to figure this out. It's extremely easy to sell your house for X amount of money and then buy another house for X amount of money in cash, right? Then you don't have a mortgage. That I think could happen.
You can have parties at your house and invite them over and then see if anybody wants to make a deal.
Like that. Another question. Can I buy a new or used manufactured home with a VA loan or home loan land package? Excellent question. So yes, you can buy a manufactured or modular home with a VA home loan, and this also applies to VA construction loans. Very important. Now, again, we don't do the construction loans. If you reach out, I can refer you out to somebody else. Just because it does take like a very specific like team of people that does them, just because there's a lot more issues that come up with them. Not to discourage you, it's just more of a process to do those type of transactions. Just so you guys know. With those construction loans, you can do barndomiums. You can do log homes. Sometimes they'll let you do all types of, if you get the money, they'll let you do a lot of different things for that. All right. Our next question. If you purchase either a home or a manufactured home that needs to be rehabbed, is it possible to get a VA home loan, a renovation loan? Great question. You have a lot of good questions today. I like that. Thank you. Okay. And again, if you guys have questions, please drop them down in the comment section. All right. Yes, you can do a renovation loan with a VA home loan. Now, normally, I believe that they're capped at like 80,000 ish. But there are a couple of things that come with that. One, normally you have to the renovation costs have to justify the future value, and that is a tough one for people. Lourdes, have you run into that where people want to do renovations, then they end up getting like the quotes, and then that ends up being worth more than the house like is after the renovations? What's your experience on that?
Yeah, that happened to me. I was getting a couple quotes, and yeah, it was way more than what the after repair value would be. So you do have to kind of, when you're looking at a renovation, you do have to look to see what other homes are selling the way that you want to complete the renovation. So they're going to look at that. So you want to make sure there's two different appraisals that come in. One, when you for the value of the current value of the home, and then what it's going to be appraised at after you do X, Y, and Z. Now, the appraiser, they have to see kind of like what you're doing to the property. Are you adding, forced hair, forced heat, AC, etc.? Like, what are you doing specifically? Because they're going to look at that just to make sure that they know what to compare it to thereafter. And you do, with renovation loans, you do have a buffer, a percentage that you can go up to. So say it appraises at 500, it can go up to like 540 or like whatever the calculation might be. So there is a specific one for different loan products. So definitely check to see what that buffer is and make sure that you're not putting too much work. Now, there's also a contingency that is added to that as well, just in case of the unknown. So if we're really tight with our numbers, you can even ask the contractor, say like, can this particular thing come out of the contingencies? So just keep in mind with that as well.
Yeah, and to touch on that reserve contingency can be a deal killer. And I would budget for more than what they tell you need. And I'll tell you that, like, I normally, I did a renovation and they're like, oh, it's a 10% reserve contingency. I'm like, 10%? Now I understand why. If they tell you 5, I'd be like, let's bump that to 10. And what that means is when things go wrong, and when I say when things go wrong, they will go wrong and you need extra money. And you think like 10% of like a $300,000 project, $30,000, you can sneeze and spend $30,000 on a renovation. I cannot stress that. You can sneeze. I'm like, oh wow, that was $30,000. Interesting. Things go wrong. Like we had like a sewer pipe that needed to play. That was an extra 20 grand. That was unexpected. Because the pipes were broken in there. But like those are the things that come up, right? And people that do this every day, it's no big deal. They're like, well, yeah, we budget for that and we put that into our calculation and we know how to do the right tests. But when you're a novice trying to do renovations, it's very painful learning lessons. And no matter how much YouTube, like I thought like, oh man, I got YouTube, I'm going to learn a whole bunch of stuff on there. No matter how much you watch and countless days and weeks and months I've spent researching, there's just things that come up that you just like did not anticipate that. And it could be as simple as I had a really good deal from a contractor, but my contractor got hurt. And now I'm delayed 2 months on a project.
Oh, no.
You know what I'm saying? So it's like you got to have some of these things in your back pocket on that. We got a good question here. Do you think VA interests will go below 5%? Lourdes? Please. Lourdes is praying right now, so everyone can join her.
Go ahead, David. Take it away.
Okay. All right, guys. If I could predict that, I'd be extremely rich. Number one. Okay, extremely. Like I don't even know if I'd be on YouTube right now. But I'll tell you that rates fluctuate. And we went off rates being extremely low. Like they shouldn't have been that low. That was kind of it caused a lot of issues that we have today because how low interest rates went. Okay, that's number one. Yeah, it's great. Everybody wants it. You would create it's not sustainable. That's why it was only temporary. I'll tell you that before COVID hit, rates were in the upper 4%. So it's not like it was, and they were in the 5s, lower 4s, or like mid to upper 4s. And we're like, oh, this is really great. I mean, I was in the market back in the 2000s, and some people were getting 11% mortgages, and they were happy. They were happy with it, right? I think it's a little bit different right now because value's at like an all-time high, right? And they were talking about doing quantitative easing to accelerate rates dropping, but they have been unsuccessful with that right now. Okay, and it was like temporary, so you kind of see rates fluctuate a little bit. For them to get to 5, I don't know. If you're in the 6 right now, if you're at under like 6, if you're like around 6%, you really would have to get under 5 to think about refinancing, right? But I really don't foresee that happening like anytime soon. There could be a chance, maybe 5.25. So I like that, like negotiating with me on the things. Instead of 5, Like, what about 5.2? I like that. I'll tell you that we do have a wild card in the mix. Okay, a pretty big one is
Mhm.
that this year the president will nominate a new Fed chair. Now, I don't know if they go and they're like, we're going to lower it right away, but the committee doesn't agree on that. And it's like a sole person making that decision. That won't necessarily be a good thing. And it can
Mhm.
cause a lot of imbalance and how like the free trades work. Because technically the Fed's supposed to be independent. So they may implement quantitative easing policy. That's what happened during COVID. That's why you saw stock markets go up and rates go down, because the government artificially they purchased all the bonds, so people didn't have to put money into the bond market, right? They put everything into the stock market. Stock market X goes up.
Mhm.
They stopped quantitative easing, quantitative tightening, right? So now they're saying we're not buying any bonds. So, who buys all these bonds? Well, it's corporations and investors. So now they pull money out of stock markets and they put it into bonds, and then they have to increase bond yields in order to get more money back for themselves. So they invest in that. That's why rates are still high.
Yeah.
And if rates drop too much, the amount of, I don't know how to explain this. You have all these mortgage-backed securities out there. Okay.
Yeah.
If you have a refinance boom, it'll be the same thing. All these companies are going to lose a ton of money because now all of a sudden all these tranches are going to get refinanced out. Right? And they're going to create all new ones again at really low interest rates. And then who wants to buy those interest rates when they're too low? You know what I'm saying? So we're in this vicious circle of like, I want rates to go down, but I don't know like if it's going to be the right decision to make that move. I know people don't like me saying that, but I think if rates come down too much without the market stabilizing enough, I think things are going to get strange. What do you
Yeah.
think?
I mean, I want them to come down.
I know.
I want them to come down just because affordability is like already like crazy. I understand what you're saying, but personally, I
know.
think it'll just be more affordable.
Yeah, but you know what happens every time, Lord? What happens every time rates drop? What goes up?
The valuation.
Right. And so we're back to this like circus where it's like in this vicious circle that you think it's the crowd mentality. If everyone is waiting for it, again, go back to if it's your time to buy, just buy a place. Who cares what's going on? Because it's a herd mentality. If you and your friend next to you and the friend next to them and their friend next to them, everyone's waiting for rates to drop, and the rates drop, you now have all these people that sat on the sidelines going into the market. They are causing the market prices to go up because they were waiting for rates to drop, versus someone that comes into the market that says, I can afford today, I could lock in the equity price today, and then in 6 months or a year or even 2 years from now, market adjusts, rates go down. Then you let all those people compete and increase values while you refinance your house. I hope that makes sense. Like, I can't beat that enough. That's the way to do it. Because like people will ask, like, yeah, LZZ. I don't know if like if you want to refinance at some point to get the lower rates. Again, that definitely makes sense. But if you're thinking of it from a should I buy, should I not for rates to drop, then you're in that mentality of like where everyone else is, where yeah, rates will be lower, but your payment's going to be higher versus someone that's buying now with rates are where they are. Hope that makes sense. All right. Another question we got. How does restoration of COE work? What evidence is needed to speed up the process? Loris, you want to take it?
Sure. As soon as your house sells, you can buy another one.
Okay,
So that
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 was
is
the short
the
answer.
the short answer. No, I've done it where I bought and sold the same day. I was even actually waiting outside of the house, waiting for it to clear, and then I'm like, "Cool, we're in." And I had the, I had the U-Haul outside, and I started moving stuff in. So I was just waiting for that. But you can do that as far as the restoration. The only thing that it takes some time for the restoration is if you do an assumable loan. Is that correct, David?
Yeah, so if you do an assumable loan, I believe 60 days. Otherwise, it's the same day. So with I mean, what he's talking about, I'm assuming there's a couple, and actually, this is actually good for you guys to know, for everyone to know. So there's a couple ways that this happens, right? So a certificate of eligibility is your eligibility, or certificate of eligibility is your ability to get a VA loan, right? So it's like a certificate that says, well, I have this, I would like to apply for a VA loan. Qualification is that do you have the credit collateral capacity to be able to afford a payment, right? Eligibility, qualification, two different things. With your certificate of eligibility, when you use a VA loan, your entitlement, you start using your entitlement. Okay. I'm going to try to make this as simple as possible. When you have entitlement locked into your home, it changes the dynamic of your loan when you're trying to use it again, right? Either you are having multiple VA home loans, very important. You have a VA loan, you want to sell a house and you want to buy it, very important because it depends on the strategy. Because some people have to sell before they can buy. And like Lourdes mentioned, you can sell and buy the same day. And there has to do like, they don't have to do a full restoration because it's held internally. We have a process for that. The other way this affects people is that if you have a VA loan, you refinance out of a VA loan into a conventional loan, your VA loan's still locked into that house. You didn't free up your benefits. Now, if you paid off your house, you moved it to like an LLC or something like that, well, then you can tell the VA, hey, I don't own this property anymore. Free up my benefits. And it's the same thing with this question. If you own a house and you sell that house, then you show them the closing disclosure or a HUD one if it's from before the Dodd-Frank Act, but you believe that was 2001, where they changed how we do the disclosures. Okay, so you would provide that documentation. Sorry. One thing that happens with folks is that it could be like 10 years go by, they sell their house, they never restore their benefits. And then they come to us and they're like, hey, I want to buy a house. And we're like, wait, what's this house doing? They're like, I sold that house a long time ago. And we're like, but where's the evidence? They're like, none. So you have to spend a couple $100 to do what's called the track search. So if you do run into those problems and you're having a hard time issue, please let me know down in the questions below. That's a good. Actually, let me cover this. Can you use a VA loan for ADUs? Lourdes, you know the answer on that one?
Additional dwelling units. Is that what that stands for?
Yeah.
Can you use a VA loan for ADUs, additional dwelling units? It would just have to you would have to have ownership. Now it may be different in different areas, but here how the ADU process, you do have to own the property, you do have to apply for it. So you would have to do a renovation loan, but then that's no, you would have to own it. So you would probably have to do a home equity line of credit to be able to do the ADUs and get those approved.
Yeah. So so I would say there's two parts to that. So Lourdes, you made a good point because a lot of people are like, I want to add an ADU to my property. And then we have veterans that want to buy a house that has an ADU, okay, in it. So we did a video on that with ADUs. You guys could check out the YouTube channel. Make sure you guys hit the like and subscribe button. And you can check out, I did a whole video on going over the ADUs and how they count. It's based on like what the appraisal says, the highest and best uses of the property. ADUs, you can't use that income to qualify. It would have to be a proper multifamily. That's why multifamilies are a better option, I would say, for that. And it really is very specific to the area. So, Lourdes, you made a good point on that. Like, you got to really be careful with that. Otherwise, you can put yourself in a bad position. All right. How valid are the VA mortgage rate refinance quotes I receive in the mail? Should be a lot of exclamation marks after that. I assume there are hidden fees or factors to consider. LJZ, you are 2000% correct.
Be careful.
You got, like, they will make it look like it's coming from your more like let me use an example. People will message me, like past clients, like, David, thanks for sending me the email, or thanks for mailing me this. What are the rates right now? I saw that the rates were 4.99. And I'm like, I never sent you anything. Like, well, it says your bank's name on here. And I'm like, no. Let me take a look at it. Send me a picture of it. So they use publicly available data. They match it up with the mortgage company. I saw this recently on something. I was like, what is this? How did they get all this data? But anyways, they aggregate all of it and buy it. And so they'll make it look like it's coming from like your mortgage company. But anyways, we look at the details. They're charging 3 points. It was like $25,000 in the closing costs. Like, a lot of times these places are just out there to get your money. So you have to be really careful. If you want a honest opinion, you could reach out and we'll look at what you have right now for that. This question is, what would be a good scenario for a family of veterans who are seeking to purchase or build a duplex for the purposes of staying together, but not? I see what they're saying. We've seen this happen where like a family buys a multifamily and they live in their own units. It's like being together, but not.
A family of veterans. Is it okay? So a scenario for a family of veterans.
Yeah, it could be like you and your boys just hanging out,
Oh, just
right?
me and my girlfriends. We all go by. They're all veterans, and we all go by a building.
Yeah, maybe that's what it means. But I'll tell you that, I had this question the other day. I was actually from one of your clients that were like, well, I want to buy a house with another veteran. And I'm like, well, it's called the joint home loan application. And one, you split your benefits. That's when you're not married, right? You want to split them. And then there's so many, just doing this for a long time. This is my just opinion. Do this for a long time. Anytime you do stuff where either you're not married, but you're trying to buy stuff together, it just is a disaster, right? Someone wants to leave, they want to sell the house, the other one doesn't want to do it. Well, then how do you buy out the other one when you have a really good interest rate? And it just like it creates all these types of issues for that. But like if you're like, hey, I'm gonna buy the place, and then I'm gonna have my other veteran buddies live in it. That's cool. That way you can kick them out when you want to. And you don't have no commitment. We've seen a lot of cool strategies. Lourdes, you do a lot of this where you'll buy a multifamily and then you'll house veterans in there, right? That pay through various housing programs. That's cool because they like I was just talking with somebody. They would pay like $1,000 a room, and you may be buying like a home that maybe has like a $3,000 mortgage or like a multifamily, and that one unit covers your entire mortgage, and you got still another unit plus the unit you live in. So some people come up with some real clever ways to make a lot of extra money. But that is a good idea. Someday may never come. No, I forgot what that was in reference to. But yeah, I know we answered a lot of questions today, and I'm glad that you guys joined us today. We're coming up on our hour. But it's always a pleasure talking with you guys. We're going to be doing some new format of videos coming up. So we're going to try to go a little bit broader on the topics because there's a lot of things that are happening in the veteran space. You guys, or I'll say outside the veteran space that affect you, right? Because a lot of times we're talking policy, hey, be home loan, this is exactly. But there's a lot of things that put pressure on these benefits, or things that maybe we're not talking about, which we're going to talk a lot more of, right? So things that are happening in the broader housing markets, policies that can affect veterans in different ways. So stay tuned for all that. We'll be dropping some of those videos this week. Lourdes, any closing thoughts for the folks out there?
No, I guess like, back to budgeting, like stick to your budget. The best time to buy is when you're financially ready. I think that's probably like, and we talk about it every time, but that's probably my closing remarks.
I think that's our closing remarks for the night. For the day. I normally said for the night, but 'cause it's also dark in here with the blackout blinds. But I want to just thank everyone that joined us for lunch. I hope you're having a great lunch. And then we'll be doing plenty of these coming up for the rest of the year. So stay tuned, and we'll catch you guys on the next